Good morning, and here we have Zoran Solano from a hot property in Brisbane, myself, Lauren Staley from Infolio Property Advisors in Melbourne, and Chris Gray from Your Empire in Sydney, and together we're Your Empire nationally. Here to talk about what's happening in property over the last 4 weeks and looking back into October. I'll go straight to you, Chris. What's been happening in your market?
Well, look, business as usual. It's slow and steady wins the races. It has been for the last 3 decades, I reckon. But we probably had double the amount of clients sign on last month.
Right.
Now, I wouldn't necessarily read anything into it. Quite often, our clients take years and years to come on. Quite often, they're buying $1 to $2 million properties, and so it is a substantial price purchase. And they need to obviously get finances and get their families in order. So we do see that it takes people a long, long time from when they first meet us. But it just goes to show that there's still strength in the market. Sure, interest rates are high. We still haven't had that rate cut yet, but people are out there buying. They're buying homes. They're buying investments. They're thinking long term. And that's the thing is because the market's not full of buyers, they're getting reasonable properties for reasonable prices rather than paying through the roof. And that's the opportunity that some people will curse in the year to come to say, damn, I should have bought in 2024.
Yeah, it's interesting. You bring up the comment about the rate reductions and the fact that we haven't seen one yet, considering what's happening globally and particularly in the US. Have you got any thoughts on when we might see a rate reduction? What's your personal view?
So again, I don't even waste any time on it. It's like the US election as well, is I concentrate on things I can control. And the rest of it is what it is. Again, because we're investing for 10, 20 or 30 years, I've been paying, I think, 12% interest rates. We've obviously paid down to 2 or 3. I know it's going to chop and change over the years. So will rents, and so will capital growth. And so I do not waste any time whatsoever thinking about it.
Yeah, good answer, Chris. And Zoran, what's happening in the Brisbane market? Are you still bounding like the rest of us are hearing?
Brisbane, it's warm. It's a bit subtropical, and like our climate, things are happening. But what I would say at the moment is the market has shifted to more of a buyer's market. And we've actually seen more buyer activity in the last few weeks engaging our services. We have seen, similar to Chris, a bit of an uptake on clients coming on board. That might be a bit of a pre-Christmas rush of, hey, I've got to get the ball going before Christmas, or I want to get something before Christmas. So we're seeing a little bit of that at the moment for sure. I think right now, to Chris's point, there is this unique window where sellers have gotten a little bit more urgent. There's more sellers on the market, more properties to choose from, but buyers haven't quite gotten the confidence of the so-called potential rate cut. I think as soon as we do see a rate cut, I think you're actually going to see buyers re-enter the market, and that's too late. That's reactionary thinking. I think that investors should be proactive at the moment, knowing, as Chris said, the long-term outlook, and also that interest rates are going to ebb and flow. So there is a unique opportunity, I think, over the next 3 months, because Christmas, for a lot of sellers, becomes a line in the sand and creates some urgency. And I think we can take advantage of that as buyers.
Yeah, that's interesting. Look, if I reflect on my last couple of months, September was probably one of my worst months on record historically in 17 years in business. It was as quiet as it could have been, not for lack of trying. October was a very buoyant month for us, but we're looking down the barrel of November and December, and it's hard to say what's going to happen. I mean, as you would both be aware, there's very few investors looking in the Melbourne property market at the moment, sadly, because it is one of the best buying markets I've seen in my 25-year career. But where I do a huge amount of my buying, being the home buying market, people who are scaling up, people aren't moving. And it doesn't matter if you're looking at a $3 million house or a $10 million house or a $20 million house. The properties are just sitting there. We're seeing lots of price reductions. It is the best buying market I have ever seen, but sadly there is the sheep mentality, but there's also just trepidation around it. Why would you buy when you feel as though that there's some economic unrest? Why would you buy if you feel as though that there's some, and money's tight, right? But it's not tight for everyone. And that's the thing that's probably a little bit frustrating for me in the market that we buy in, is that, arguably if you're scaling your home up, you're buying at a 10 to 15% discount, and you give it, as you said, Zoran, 1 to 2 rate cuts, and we're going to be in a vastly different position. So that gap between what you could scale up to or what you could buy as an investment property is going to cost you a hell of a lot more next year than what it does today. So that's, I think, the message that's really important for us to get out to the wider market at the moment, that, it's hard because I think people look at us as, obviously, we get rewarded by people buying, but our message has been clear and it's been the same the whole way along. Buy and hold, but God damn it, if you can buy now, buy now. What do we think about the US election, and do we think it's going to have much of an impact on our market right now, Zoran?
Oh, look, I think we're going to maybe see some Americans leaving America. Maybe. I was just in New Zealand, and they were actually very much anticipating they might get a lot of holiday workers over the summer and next winter of people leaving America. So, look, again, like Chris, I really don't think the US election affects the property price of the blue chip areas that we purchase. I don't think it's influential enough. I don't think our market is as volatile as the shares, as, ASX listed companies and those sort of things, which may have direct dealings with decisions made on a macroeconomic level by a change of government in the US. I just don't see that making a significant difference in the market we play in. And I think that it should be business as usual.
Chris, what are your thoughts?
Again, I don't really follow it, but obviously I saw the news this morning. You can't avoid it, and it's probably worth keeping the TV off for a couple of days. But what I find is our banks and our government need to keep property stable, because the whole banking economy is built up on securing properties. Banks want to lend more money. If property prices increase, that's what they'll be doing, and more people will be buying. There's enough immigration coming into Australia. Obviously, all the politicians fight against each other, saying that the other party aren't building enough properties. And so as long as we've got that immigration and you're investing in good areas where there's no supply, plenty of demand, property prices will continue to be strong. And just like you said, look, Melbourne's going through a bit of a tough time at the moment. But again, it's not forever. That's the opportunity to buy. We've seen the same thing decade after decade. We keep saying the same message. People still make the same mistakes decade after decade, and they have the same regrets. And so at some point, they've just got to wake up and say, look, it's time to go. We just had a Melbourne client yesterday that moved from Melbourne to Sydney to try and get a bit warmer. Not quite as warm as Queensland, of course. And they said, look, they were unsure about whether they sell their house now or whether there's going to be a bounce back next year. But they've got $1 million in super, and so, or effectively $500,000, leverage at 50%, and they can then still buy in Sydney for $1 million. So at least that's something in between. Yeah,
that's a great advice going on there. And interestingly, we've got, what are we? We're 4 weeks till Christmas, or 5 weeks until Christmas. And so in our market down here, most of the properties go to auction. That means that over the next week, we're going to see the last houses hit the market that are going to be available between now and the end of the year. And as we all know, we get to January, and that's really, we have a zero budget month for January, because everyone takes the time off. It's the only time of year where we find that as a real estate agent or a buyer's agent, we get a break. So there's going to be some homes available. There's going to be some investment properties available where people need to liquidate them. I personally find that this is one of the most opportunistic times to buy real estate, because if you have got someone who has already purchased and they need to sell, their motivation is as high as you're going to see it. They need to get it sold, or they're looking down the barrel of potentially 2 months of no activity before the market comes back after the Australia Day weekend. And the same thing for investors that have been offloading some really good assets because they need it, perhaps from a cash flow point of view. The opportunities are really good. And also the off markets increase. So we find our off market, on average, our buying, 53% of everything we buy is unadvertised and off market stock. That increases over the December market period. How do you guys see that happening for you, Zoran?
Yeah, very similar, very similar. As I said, line in the sand of the end of year and change of location. A lot of people might be doing interstate migrations over this time and those sort of things. So I definitely agree. I've purchased a property Christmas Eve, contract signed 24th of December. So I definitely agree that there are some agents who will pack their bag and a bat and ball and go home. Others will continue to grind right up until the Christmas time.
What about you, Chris?
Yeah, look, we've done deals on the 24th of December. We've done deals on the 3rd of January, so it can be great. Just looking at the diary now, the 24th is actually a Tuesday, so the chances are everyone's going to pack up the solicitors on the 20th, Friday the 20th. So I reckon that's pretty much the last day. But as you say, there's always someone still around. And so most solicitors do go away. And so if you've got a solicitor that can work and can exchange a contract, then suddenly you're sitting in a prime seat.
Yeah, great. Now, let's look at the results for October. Chris, can you share that with us?
Yep, we'll put it up on the screen. As usual, we get the CoreLogic RP data results. I'll just explain, just in case you're on a mobile and the screen's too small. Sydney minus 0.1 for the month, plus 0.1 for the quarter, 3.7 annually. Melbourne minus 0.2 for the month, minus 0.8 for the quarter, and minus 1.9 annually. Brisbane 0.7 for the month, 2.4 for the quarter, and 30% annually. And we've got the other states in there as well. Again, you've got to remember these are always averages. So something could be going up 10%, something's going down 10%, and the average is 0. I spoke to a few agents before here to say, look, how are you finding the market right at the moment? And they say, look, it's a classic thing is if the property ticks all the boxes, it's got parking, it's the right side of the street, it's got the right amount of bedrooms and size and things like that, there's still plenty of demand, there's still people chasing it at auction. But if it hasn't got those things, sure, then it's a bit of 50-50.
I think it's really important to also, with data, pull it out a little bit and extrapolate what it really means, because as we know, or for those who don't know, in Victoria or in Melbourne in particular, because of our land tax and all of the additional taxes that our great government has put upon us, there's been many, many, many investors sell their properties. So there hasn't actually been a lot of sales stock. Really good homes haven't been selling. So when we're looking at that data, it's not really relating to property prices on good quality homes coming back significantly. It's because we've had an influx of investor grade property. Now, not the type of investor grade property we buy, but investor grade property that can't be sold, whether that's off the plan apartments that have been built and maybe 1 or 2 years old, they've been built poorly, properties that are on main roads, or properties that are in areas that are really not that desirable. So all of that information comes in and gives you that sort of data. So you've got to look at the macro and the micro to make some really smart decisions about what's a good top property to buy and when to buy it. Well, I'm very hopeful that for November and December, I've got some better news for everyone on what's going on down in Melbourne, but onwards and upwards. And I think that the property market, what goes up must come down and what goes down must come up. I think we're going to have a good 2025.
Yeah, certainly. I agree. And looking at those statistics, it looks like, Brisbane statistically slowed us ever so slightly on growth down to the 0.7. And I think that creates, and that just shows that window of opportunity where buyers have maybe taken their foot off the accelerator just that little bit. And I think that represents still some good opportunity there as well. So excellent.
Excellent.
You've got to be in it to win it. That's the only way.
Absolutely. Well, thanks so much for listening, guys. And we look forward to seeing you and talking through November at the end of the month. That's it for us at Empire Property National.